So the topic of credit repair is something that I get asked about a lot by clients and by students, whether they are thinking about doing it or whether they've gone through it and they ask what went wrong. When you think about credit repair, probably the first thing that comes to mind is somehow improving the credit report, therefore improving the credit score. But what does credit repair really mean? It can mean a few different things. It could mean me calling the number of the telephone number that I see on the side of the road on a sign, on a stake at an intersection. It could be on a billboard. It could be any of those credit repair places that you see marketing, they're doing their advertising. It could be any of those types of places where you're going to pay somebody to repair your credit. Now, what that means, what exactly is it that they're going to do? Couldn't somebody just repair their credit on their own? Of course they could, but it just depends on what do we mean by credit repair. So that's really what I want to focus on in this module is what does credit repair mean? What are the different definitions and what is legitimate and what is illegitimate? My main goal is for you to understand how not to get ripped off. There are a lot of scams out there when it comes to credit repair. And I've had a lot of students in my first-time homebuyer classes who have spent thousands of dollars trying to repair their credit. And the only thing that happened is they're out $2,000, $3,000, and really nothing was done that they couldn't have just done on their own, or paper shuffling, or stuff that was done was pretty basic, or maybe they were told to do something that was actually illegal. So we're going to get into all of that different type of approach to credit repair. So the first thing I would look at is it a waste of money overall? I think it depends if I'm going to spend the money on credit repair, if I am actually going to pay somebody to do it for me, what is it that they're promising? What is it that they are going to do in exchange for me giving them my money? And is it something that they can do better than what I could do? So that's really the big thing, is people need to get past hearing what they want to hear. And I think that's the big issue. That's how people spend $1,000, $2,000, $3,000. I've heard up to $5,000 paying to some company or individual who says, I can make your credit, I can make all the bad stuff go away. Well, that would be like me going to a fitness trainer and them saying, well, I can probably help you lose 50 pounds in a week. Oh, of course, that's exactly what I want to hear. But is it realistic? Oh, you want to lose 50 pounds in 1 week? I'm going to have to charge you more to make that happen, but it can happen. Well, that's not really going to happen. So people hear what they want to hear, and then there's a price tag to it, and they just move towards the goal of, I will pay this amount to make this pain that I am experiencing with my credit go away. But ultimately, they get hit twice with the pain, because if they are giving their money, giving a large sum of money to somebody who's really not doing anything, or is just basically ripping them off, taking advantage of them, then it gets even worse. So it could be a waste of money in that sense. But don't get me wrong, there are plenty of places out there that are legitimate, whether they're nonprofit or for-profit. I know individuals in both realms who are honest. They tell the truth. They're going to be very upfront in terms of this is what is going to happen. We cannot make any guarantees. We're going to try to do this. Now, that's if we're talking negotiation, where there is something that is legitimately owed that's become a bad debt. You can try to negotiate that. In fact, bankruptcy attorneys do that as well. They don't just file bankruptcies. In some cases, they will actually negotiate debt so that somebody doesn't have to file for bankruptcy unless it's a bigger picture issue. So negotiation can be part of credit repair. In my mind, credit repair, the big issue that I run into is where people have old information that's incorrect. I see that a lot in the mortgage world where there's just old stuff hanging around, or maybe it's something where they have a similar name to other people. Maybe they're a junior or a senior. They have a common last name. That can be an issue where stuff shows up that shouldn't have been on there in the first place. Or maybe they're victims of identity theft. Now, the first thing I'm always going to ask somebody when they tell me, oh, all that bad stuff, somebody stole my identity. First thing I'm going to ask for is the police report. Because with the police report, we can do a lot of things. And I would say 9 times out of 10, they don't have a police report. And they're just making up the fact that they were victims of identity theft, because all of a sudden they start remembering, oh yeah, that's mine, this, that, and the other. So we don't want to just blame our problems on invisible enemies. We want to just address it and take care of it. So whether it's a waste of money, the jury's out on that. I guess we'll decide at the end of the module. Credit repair scams. So let's talk about the credit repair scams. There's 3 main things that we're going to look at. So number 1, if an organization says they're just going to dispute every negative item on your credit report, even if it's correct, that is a scam. Do not give them any money. Run away from them. Do not return their phone calls. Do not work with them. Do not deal with them. Do not get caught up in their promises. Because if they're going to dispute everything and it is actually correct, disputing everything that's negative isn't going to solve your problems. It might work in the short term because they're under the Fair Credit Reporting Act, under federal law. They do have to respond within 30 days to any dispute when you dispute with the credit bureaus, not the creditors, but with the credit bureaus. So oftentimes what will happen is you'll dispute with the credit bureaus. They contact the creditor. The creditor doesn't get back to the credit bureau in time, and so maybe something is removed. Or while it's in dispute, while it actually says in dispute for that account on your credit report, that's not going to count in your credit score. So if it's not going to count in your credit score, well, you can get all the negative items to be in dispute, then in theory, it should push your credit score up. However, if you're applying for a mortgage, that is going to be unwound by the fact that if you have disputes on negative accounts, it probably will void the automated underwriting approval that you would get from the computer. And so what's going to happen is the underwriter is going to look at it and say, okay, they've got these disputes. It gave an approval, but that's based on these disputes being legitimate, not with the strategy of trying to just get the bad stuff off to boost the credit score and then in turn get an approval. So they're going to see that. And when they see that, they're going to say these accounts have to be brought out of dispute. And so that it's going to catch up to the individual at that point in time generally. Number 2, if they instruct you to lie on credit applications, because here's what comes next. Let's say that a credit repair organization that says they're going to get all the negative stuff off of your credit report. Let's say that they get any reference to a foreclosure off. Let's say that they get any reference to a bankruptcy off of there. Well, if they succeed in doing that and it's no longer in your credit report, what's going to happen when you go and apply for a mortgage and you're going to be asked the questions on page 3 of the mortgage application that every lender in the United States uses. It's a uniform residential mortgage application called the 1003. On page 3 of that application, it asks a series of questions. And one of the questions is, have you had a foreclosure in the previous 7 years? Another question is, have you had a bankruptcy in the previous 7 years? So if you have had that, at that point in time, now you have to make a choice. Are you going to lie and commit mortgage fraud to keep this moving forward? Are you going to, so you paid to have the negative stuff removed, and let's say that that was successful, and somehow there's no disputed items, everything's gone, but now you have to lie and commit fraud and risk going to jail. And when it comes to mortgage fraud, don't do it, first of all. But I was at a conference, and this speaker, he said something that I will never forget. He had gone to prison for 2 years for mortgage fraud. He was a mortgage lender just like me, and he got caught up in a scheme that he wished that he hadn't got caught up in. But he was going to go away for 2 years, and he did go away for 2 years. And he had 2 young kids, and so when it was time for him to go off to prison, the only way he could think of how is he going to explain to his young kids that he's going to be gone for 2 years. He said, "Kids, I'm going to be gone for the next 2 visits by Santa Claus. After that, I will be back." That breaks your heart, to think about the fact that committing mortgage fraud, you lose your freedom, and who does that affect? It affects a lot of people. Is it worth it? That's what you have to ask yourself. The question is it worth it to risk going to prison to commit mortgage fraud? So do not do anything. If they tell you to lie on credit applications, if they tell you that they're going to give you, number 3 here, a new identity, and if you start using a different number than your assigned social security number, they say, hey, just start using this tax identification number instead. It's 9 digits, just like the social security number. Well, if all of a sudden now you're using a tax ID instead of a social security number, that's not acceptable. That is not allowed. Do not believe them. They are lying to you. They're taking your money, and they're setting you up to commit a crime that could have consequences that you don't want to experience. So do not substitute your social security number with a tax ID number, or even worse, they might give you a number that's somebody else's social security number. Even worse. So do not risk your freedom. Think about that. How would you explain it to your kids? How would you explain it to your family? It's not something that you want to go, it's not a path that you want to go down. So those are the 3 main scams. And if you hear these things, if they say, we're going to just dispute everything that's negative, run. If they say, just say this on credit applications, run. And if they say, we're going to have you use this number instead of your current social security number, run as fast as you can and get away from them, because they are going to cause you to do something that's not going to be good for you. So I had a credit repair guy come into my office, which is pretty common. A lot of times credit repair companies will go into mortgage companies and say, hey, all those denied files that you can't get approved because of their credit, we could probably help. We can get all the negative stuff removed. And if we're successful in getting it removed, under federal law, it's not allowed to be put back on there. It's gone forever. And I was like, really? Well, that's interesting, because when I was in law school, that's not how I learned it. And so I pulled out my Fair Credit Reporting Act, and it's in subsection 611A5BI. And if you look under where it's underlined, it says, unless the person who furnishes information certifies that the information is complete and accurate. So, and prior to that, it says it can be reinserted. So information that's deleted during the dispute process, if a creditor didn't reply within the 30 days, it absolutely can be reinserted. It says it right in the Fair Credit Reporting Act in subsection 611 regarding reinsertion. All they have to do, the furnisher or the creditor, they just have to certify that the information is complete and accurate, which is just them saying, yep, it's complete and accurate. Some cases you show something is complete and accurate, you certify it by, you take a stamp on a piece of paper and write, I certify this. That's sometimes all it is. Now, I'm sure it's not, they're not stamping things. I'm sure it's all just, digital anyway, but it's not a process. All they have to do to certify is to basically just submit it. And by submitting, that's probably good enough in terms of certifying it to be true. Otherwise, they wouldn't be submitting it. So if somebody tells you, once something is deleted from your credit report, if we're successful in that, it can never be put back on there. Because this guy was convinced, because that's how he was trained. He didn't know any better. Not until I pulled my Fair Credit Reporting Act textbook out and showed him exactly where it said it. Then he kind of thinking, wow, I wonder what other lies I've been trained to tell. So don't believe it. It absolutely, I love talking to them because I love to hear what they'll tell me that may not actually be true. So always know the source. So if somebody says it's this way, well, what's the source of that information? I'll never forget I had a bankruptcy professor who was a bankruptcy judge, and he, every time we answered a question in class, he would always ask, what is the source of your answer? And we would have to cite what section of the bankruptcy code that answer came from. You should do the same thing. If somebody tells you something is true, ask them, what's the source of that information? They say, oh, I read it somewhere. No, it's not a very good source. There should be, whether it's a law, a statute, whether it's state, federal, it should be something, with the FICO score, information put out by FICO. That's how we would know, different impacts. For me, I look at so many different credit reports. I see different things and how it affects people. So you have the experience there of how things are affected. But find out what the source is. If somebody is trying to convince you of something and you're not quite sure, ask about the source. If they can't give you a source, maybe it's not something that you should believe. Okay, let's talk about legitimate credit repair, because we know that there is legitimate credit repair out there. There are people who don't want to rip you off. They want to help you. And not going to charge an insane amount of money to do it necessarily. They're just going to help you get information that's inaccurate removed from your credit report, because sometimes that can be very tedious. So number one, correcting inaccurate information. If you have an account, let's say it's a collection that's been on there for over 7 years. Well, under the Fair Credit Reporting Act, it's not supposed to be there beyond 7 years. So that would be something that they could try to remove. Or keep in mind, it's something that you can do yourself. You don't have to pay anybody to do this for you. You could send a letter to the credit bureaus and say, XYZ collection on my credit report is 8 years old. Please remove it. Now, here's the problem. Can you prove that? What if they reported it and it just kept changing hands? Now, the 7 years doesn't start over again just because it got sent to a new collection agency. But the problem is if they're changing that date, and that's a whole nother section to the class, but if they're changing that date, it's hard to prove, which what you need to do to combat that is always save copies of your credit report. Saving copies of your credit report will save you in that situation. Keep in mind, you can't get past copies of your credit report. It's kind of this living, breathing document that is good at the moment, but is constantly changing. And so, stuff is reported if dates are changed. If you don't have solid documentation to prove an original date, you might be stuck. So, because in the worst case scenario, maybe you have to go to court. There was actually, there's been cases where people have had to go to those extremes to prove that a debt was over 7 years. And actually the one I'm thinking about is Calvary Investments, I believe, versus Rosenberg. That debt was like 30 years old. And so he took them to court over it. And it's a whole nother story here, but it just goes to show, if you can prove it, if you can prove when that first reported, then you have a much better chance. So anything that's incorrect, anything that's inaccurate, that's beyond the 7-year rule of how that might apply, there's different rules for different things. And that's, knowing what's correct versus what's not correct, that's important. So getting that stuff updated. Negotiating lower payments on bad debts. That's perfectly fine. You can always negotiate. You can always negotiate to pay a lesser amount on a bad debt. There's absolutely nothing wrong with that. As long as you are taking care of it in full, it'll say settled for less than full amount. That's fine. If you owe 1,000 and they'll accept 400, great. If they'll accept less, even better. But if they say, no, we're not gonna accept anything less, that's fine too. But keep this in mind. If you do settle on a debt, and let's say they forgive $700 and you're going to pay them $300 on a $1,000 debt, you're going to get a 1099-C when it comes to tax time, and you're going to have to pay taxes on that $700 of forgiven debt as if it was real income. So any debt that's forgiven on these collections, are going to be treated as real income. So be prepared for that, because I've seen it happen where somebody was not aware of that and then they get a large amount of 1099-Cs. I mean, I've seen people where they're negotiating on $70,000, $100,000 of credit card debt that's gone bad. And so this can get sizable. And so all of a sudden their tax picture changed dramatically because they weren't setting aside anything to pay this higher tax bill that was going to be owed. And as a result, just didn't file his taxes. And when you don't file your taxes for, I don't know how long it is, like 3 years, ultimately the IRS is going to catch up to you and they're going to place a lien against you. And so he had an IRS tax lien. So he started doing the right thing. He was negotiating out his debts. He was trying to get everything taken care of so that he was not past due on anything. But then ultimately he created what I would call maybe an even bigger issue of now he ended up with like a $15,000 IRS tax lien. So what does that teach us? It teaches us that if we are going to negotiate lesser amounts, we got to be prepared for the consequence of that, which is that it's going to be taxable, whatever the forgiven amount is. So be aware of that. Number 3, payment plan over a period of time. If I'm going to pay a certain amount for a certain number of years, maybe it's 3 years, maybe it's 5 years, whatever the case may be. But keep in mind, is that going to help me in the short term? No, not really. One of the things I remember from my bankruptcy class, the bankruptcy judge asked me, he said, I know that you're in the banking sector. Is it better to have a Chapter 7 or a Chapter 13? And Chapter 7 is the full discharge right at that, it's shorter, you get just discharge the debt. Chapter 13 is the repayment plan that can go up to 5 years, 3 to 5 years typically, up to 5. And my response was, I'd much rather have a mortgage client that files for a Chapter 7 because it's much cleaner, it's much quicker, and it doesn't prolong for 3 to 5 years. That 3 to 5 years while somebody's in a repayment plan, it's not good. It's the credit doesn't improve typically. It can, because it depends on what else might be on that credit report. So I have seen where people have decent credit scores because things aren't, maybe things weren't past due to begin with, whatever the case may be. There's a lot of variables there, but it can just prolong stuff. If it was really bad at the starting point, it's going to probably be really bad until the end point, versus, okay, everything was good, I was never late, I'm in a program, they're not going to report me late as long as I make these payments. That person's probably not going to be that affected by that payment plan. So it does vary, but just keep in mind, getting into the payment plan isn't going to generally take bad credit and make it better in the short term. In the long term, it should. So just keep that in mind. Okay, at the end of the day, you have to ask yourself this question. Am I a procrastinator? Will I, number 1, review my credit report? Number 2, make sure I understand what's on my credit report. And number 3, do the things I'm going to need to do to make my credit report as accurate as it possibly can be so that I can get what I want. Because that's really the whole purpose here, is we want our credit scores to be as high as possible so that we can get the things that we want or need. And generally speaking, I'm always focusing on the mortgage issue, buying a house, being able to finance a house. So if that's important to you, ask yourself the question of, will I do it? Because you could do it yourself, but will you? And that's only you know the answer to that. But you could pay somebody to do it for you. I would just suggest look at the reviews online. They may be a member of an association that makes sure that their members are following certain criteria, stuff like that. But there are good, legitimate places out there. So you can compare cleaning up your credit report to your house. You could clean it yourself. You could pay a maid to come and clean the house for you, or you could just choose to live in a dirty house and just not mind. It's the same thing with the credit report. You can just keep on doing what you've always done and be dissatisfied, or you can take some action. It doesn't even have to be a big action. It could just be tracking that you're paying your current bills on time, because really the starting point is making sure nothing further that's bad gets on there. What is on there is on there. Don't worry about that. Worry about what might be coming. Take care of that stuff. Like if I know, hey, I know I have this $100 collection, but it's not on my credit report yet. That just became the most important debt that I have because it's not hurting me yet. It's those little strategies that will make a big difference. So check out the next module. I hope you enjoyed this one, and best of luck to you.